Happy Saturday, everyone, and welcome to the Fiscal Philosophy YouTube channel. I made this unassuming tweet on June 25th, 2025. I just said, Google leaps. Couple likes, no retweets, no comments, only a little over 100 views, very little attention, little fanfare. However, at the time, Google was still kind of in price jail. Criminally stuck below $200 a share. Now, obviously, things have changed a little bit since then. At that time, the stock was about $170 a share, and it's been a little bit more than a month now since then, and it's been a pretty solid month for Google. Now, still, most of this month has struggled, but finally, it seems to have settled on a closing price above $200. Yippee hooray for Google shareholders. And today, even at slightly over 200, I would say Google may still be slightly undervalued, whether you consider that, maybe it deserves 220, maybe 230, 240. I've heard as high as 260 from some people, but I made that tweet because I had, on top of the shares of Google I had been accumulating throughout this year, I also added this Leaps contract expiring next September. $160 strike, break-even price of $184 because, again, supremely confident that this is worth over $200, and the market can't stay dumb that long, right? Ha ha ha. Well, I mean, it can, but I was thinking it wouldn't. The primary reason I bring this up isn't necessarily to say, hey, buy Google Leaps right now. Personally, I wanted to get in before it hit 200 so that I could get the maximum possible gain. The point is, here I am, relatively unknown on Twitter, throwing out something that is casually up 82% in a few weeks' time. Yet, there are people who still go out and pay for courses by a bunch of people who have a lot of bad takes. Moreover, I don't even really believe in simply buying based on somebody else's recommendation, though I strongly believe in doing an evaluation of something based on someone's recommendation and then buying if their bull case matches up with what you can see with your own two eyes in the financials and in the world in general. What I see in the case of Google is a company that continues to drive solid top-line growth while at the same time growing profitability as well. They are now considered to be the most profitable company in the world. Yet, there is a narrative, or there was when the stock price was down a few months ago, that they are going to just get obliterated in the AI space, where this is actually proving more and more not to be the case as more quarters go by and more numbers come out. First of all, search revenue still growing. Second, Google's Gemini is one of the top, if not the top AI models at the moment. And at the same time, you have a very, in my opinion, undemanding valuation when you take into consideration how much growth they're pushing, how profitable they are, what they can do in the future, the potential of cloud and everything else. You sit here and you say, this is an extreme case of a high quality, good moat, trading in the low 20s while still growing pretty fast. Whereas you have something like Apple with almost no growth, they'll sit there and casually trade at like a 30 price to earnings for some reason. It just goes to show you that sometimes there are good deals right in front of your face. So given all of those things, I've DCA'd in one account into Google throughout this year. And then when it started to kind of come out of the valley there in June, I went ahead and said, hey, why don't I magnify my return with a leaps contract? And look, price definitely matters, all right? Certainly, if you bought there anywhere in that valley, you'd be doing way better than if you bought right at the beginning of the year or, much more recently when it was in the 190s, for sure. But that's also the time when mentally, psychologically, it's hardest to buy, when all of the voices out there are telling you anecdotes about how I only ever use ChatGPT and Grok now. I never use Google for anything anymore. Anecdotes are not the best evidence. All of the information that I have been able to see that's backed by actual data shows search by Google is very resilient, and in the AI space, that Gemini is high quality and highly competitive, and we should expect that to be accretive to shareholders. In the coming years, I even suspect that the dividend and income crowd will get into this stock. At the moment, they have a pretty good buyback program. They do have a small dividend, but look at this payout ratio. It's so low, less than 10%. So they do have room to grow that as their net income and cash flows go up over time. All this to say, there's a lot to love about Google no matter what your type of investing is. Moreover, you don't need to buy anybody's course to find easy value like this. All you needed to do, really, when this stock was getting battered down, is be able to discern between good arguments and bad arguments. The arguments against Google's performance, against the financial future of the company, etc., all seemed very overblown and not backed up by anything in terms of really firm, hard data with regards to the numbers that they could produce. All the information pointed to the opposite. Plenty of people were pointing it out. And I highly suspect a lot of people who were avoiding it when it was down, they were just more inclined to believe the bad narrative because the stock price was also down at the same time. It somehow made the bad narrative seem more credible than it really was. Seeing through that made it possible to continue to add into the stock and dollar cost average, and in my case, at a certain point, add leaps on top just in order to have a cherry on top, magnify the return. I did run the idea behind some trusted names in order to run a sanity check on myself to make sure that I wasn't missing some big obvious thing myself because of, some kind of a bias or something. And the sanity check was that more than likely Alphabet would be fine. Google stock would be a decent buy at most points this year when it was below 200, and it's probably still got a ways to go from here. Remember that there's people out there selling courses and selling their buy and sell alerts and such who would have recommended things like putting money into FTX, buying Tattooed Chef, and any number of things that would have actually cost you dearly if you had put any major money into those ideas. And I realize I'm going on a little bit of a rant here, and I recognize free ideas will not necessarily be better than the ideas from the people who charge for various courses or buy and sell alerts. That's not what I'm saying, but at least you're not having to put money up front to get access to the free ideas, and using your brain to distinguish between sound reasoning, unsound reasoning, good arguments, bad arguments. That also doesn't cost money, just time and energy, which if you're doing any kind of stock picking yourself, you should be doing a lot of thinking anyway, which this sort of just leads into my philosophy, and rant will be over shortly. But I think that rather than look to these so-called authorities that don't actually have authority or any kind of special knowledge, resources would be better spent put into yourself to become better at critical thinking, better at coming up with a framework with which to analyze and assess what are good ideas, what are bad ideas. And through that, perhaps giving yourself an edge, a better shot at success than the average person. If you agree with what I'm saying, and heck, if you agree or even disagree about Google, go ahead and let me know in the comments. Please be sure to do all the algorithm stuff to help me out. Subscribe, like, do all that stuff. Discord is in the description if you want to have more discussions in real time. Also, catch me every Saturday, 8 p.m. Eastern, Cashflow Kings Live, and follow me on X at Mr. Macho Mog. I'm supposedly a good follow, according to people who follow me. So see you there. Take it easy.